Welcome to CEO Interviews, a production of Gorecom in which we take the time to speak with small cap executives about what's going on at their companies. With us today, happy to have him for the first time because he thinks just like we do at Gorecom. Shafin Diamond, he's a CEO and founder of Victory Square Technologies, trades on the CSC under VST, VSQ.TF for our friends in the United States, and 6F6 for our friends in Europe. For those new to the story, it's going to be a lot of you. Victory Square builds, acquires, and invests in promising startups, then provides senior leadership and the resources necessary to help them grow. An example of one of those companies is our very own FansUnite. A lot of you know FansUnite, FANS, and FUNFF on the Canadian US exchanges. The small cap iGaming super company, which today, as I look, is making a new 52-week high. Victory Square acquired $2 million in stock, took the company public at a $25 million market cap, currently trades at $185 million market cap. That's the kind of work that the company does, and great investment thesis. More than just lip service, Q3 record net income, $8.9 million, earnings per share, 12 cents just in Q3. For the first 9 months, $13.6 million and 18 cents per share. They're doing great things. Shafin, welcome to the show.
Thanks for having me, George. We're really excited.
Hey, glad to have you here because everybody who's watching, or most people watching, know our thesis is that this decade is going to create more wealth from disruptive tech, small cap companies than the last 3 decades combined. You guys invest in the cutting edge of the 4th industrial revolution. Talk to us about your thesis and why you guys are on the edge.
So, no, absolutely. So I'll give you a quick background on VST. So, we were formed in 2017. Again, like you'd mentioned, our focus is to buy, build, and invest in what we believe to be the next emerging kind of tech giants. These are companies that are coming from all over the world. And our mission was to democratize access for retail investors to these emerging tech companies that are coming from all over the world. Basically giving investors ground floor access to these companies so that they can invest early as opposed to getting an opportunity when the company is already trading in billion-dollar valuation. So that was really kind of the core focus of it. You mentioned the 4th industrial, kind of revolution. There's a quote from a science fiction author named William Gibson, and he says, founders who live in the future have the best chance of winning big. At VST, our thought process is aligned with that. We believe extraordinary performance comes from seeing things that other people don't. And one of those things right now, currently, there are 5 innovation platforms. Each platform itself is a multi-trillion-dollar opportunity that we think over the next decade are going to disrupt or create disruption across every industry. So disruptive tech that crosses, sectors, geography, and markets. And we define those sectors as artificial intelligence, which is the backbone of all of these innovative platforms, DNA sequencing, robotics, blockchain, and energy storage. To give you an example of, when you look at, energy storage, smart cars, smartphones, smart TVs, robots, and all of these new innovations are all thanks to the breakthroughs in battery technology. So each of these platforms are creating tremendous, opportunities. And what we do at VST is we look for the new breed of companies that are leveraging these technologies to create disruption that we're going to see transform our lives over the next 10 and 20 years. Just a quick, I started in the tech space in 1996. And at that time, you saw upstarts like, Amazon, and then following after Google and Facebook. And I think to have asked someone at that time, do you believe these companies are going to, be the behemoths that they are today, and see companies like Kodak or Blockbuster, wither, or Sears wither and die away? I think people wouldn't have imagined it. But now that we've actually seen that happen, I think we're going to see a new breed of companies form today that are going to become trillion-dollar companies in a decade from now. And for us, that greatness and that IP is coming from everywhere. So for VST, we have our hands plugged into 80 accelerators around the world to identify these new breed of companies and then bring them into VST build and commercialize them, kind of like you referenced with FansUnite, but giving investors all over the world access to invest in VST to get access to these companies on the ground floor.
And so I want to dig a little deeper into your process, how early you find them, where you find them. But before we do, one more thing on the general philosophy, the 5 pillars you talked about: AI, blockchain, DNA sequencing, so on and so forth. When I hear that, I'm totally dialed in with you, and I'm already there. Most people, I don't think they really get it. I don't think they believe it. Maybe you can kind of explain how you see, so that people can really start to understand Victory Square. Give us some examples of how you think the world is going to be different 10 years from today through technology. I've got some examples. Like, my biggest one is autonomous flying vehicles. No doubt about it. It's going to transform everything we do. What are some examples, though, so that way people can actually understand in layman's terms some real examples of the changes that you see coming?
Yeah, well, I'll start by saying, the one thing that we realize is that people generally always want to eat, work, play, and, connect and communicate with one another. What's changed over time is how they do that and how companies deliver those to customers. So again, just going from regular mail to email to text as an example over the last 30 years, the people getting information or people sending information, what they wanted to do never changed. It's just the technology they used to do that did. And so when you talk about, like, some examples kind of looking forward, there are plenty, and air taxis again is one of them that I think, autonomous driving cars and air taxis are much closer than I think a lot of people, because those innovative platforms we talked about are more realizable, given, when you look at Moore's or Wright's law, that, the cost has kind of been brought down to make those things more reality, than not. But for us, one of the key examples we look at is really around the health space. So let's just look at digital health. What the pandemic did is it accelerated, people's comfortability with using telehealth platforms. Now, telehealth platforms are more of a first order effect. They were always there. What the pandemic did is it accelerated, the adoption of people using and feeling comfortable with that. Now, if you look at a second or third order effect of that, with people using these telehealth platforms, and we all have our smartphones now, and some have our iWatches. There's data being collected real time on individuals, or let's say a Dexcom, for example, which monitors your blood sugar level. So now we have these devices that are out there collecting data and information, and we then have that data go into, let's say, software that's built to analyze that information. The next step is machine learning that takes that information and builds logic to identify outcomes. So when we look at outcomes, for example, automated insulin delivery. So you have your Dexcom, it's monitoring your levels, notifying your doctor or yourself on your watch or your phone, and potentially automating your insulin delivery from your device itself. So a lot of what we look at is really around, we're focused on a variety of sectors, but specifically digital health, which health is quality of life. So a lot of our investments in innovation are around things that improve quality of life. Those are the things that I think we're going to start to see. When you look at DNA sequencing, right, or CRISPR therapeutics, there are some crazy things to instead of treating diseases once they come, to be able to prevent them years in advance. George, this is going to sound a bit crude. I wrote an article that was pushed out, a couple months ago, and it talked about smart toilets, or smart showers. So to look at, so these are currently being piloted right now, where if you think about it, every day you go to the bathroom. Now, this sounds crude, but your waste.
Yeah, it tells a lot about your current health. Let's face it.
Your health, daily. And so a sensor in your toilet can send a notification to your watch or directly to your doctor if something is off, which allows you to immediately, be proactive to treat that or change your habits as opposed to finding out when it's too late when you do your physical once a year, or like in the past, which I did every 10 years. So there's a lot of technologies that are coming from these, you know, these platforms I talked about. Again, AI is really powering everything.
Backbone everything. It has to be the
Yeah.
backbone everything. The other thing I like, so I'm glad you talked about that, Shafin, because I think it's important because people sometimes hear blockchain, AI, and I think they're so inundated with it that they're almost like, okay, yada, yada. They don't really, very few people like you actually show, okay, here's some real world implications of how your life will change. And there are going to be companies who are going to, you know, multi-billion trillion dollar companies going to be created just from these kind of granular technologies. Like, I like the idea of mix, you know, when you mix autonomous flying vehicles with with telemedicine, I could have a monitor that through artificial intelligence and machine learning says, I think George is going to be having a heart attack in the next 5 to 30 minutes. And an autonomous flying vehicle 6, 7, 8 years from now, I'm not talking about 50 years from now, guys, 6, 7 years from now, literally flies to my home and either gives me something I need, you know, or brings somebody to help me. But that's the kind of world that, and it's not too far away. So if you, for everyone who's watching at home or listening and finding out about Victory Square for the first time, if you stopped the interview right there and didn't watch anything further, that's the value proposition. You don't have to understand all the implications of artificial intelligence, blockchain, robotics, DNA sequencing. You don't have to do that. I mean, great, you should, highly encourage it. But if you can't, don't have the time, or it's not your specialty, Victory Square is your vehicle. That's, so if you stop, if you listen to nothing else, that's the value proposition right there. So Shafin, let's go into your, how you guys run your business in terms of your investment criteria. What we know what kind of companies you're looking for, disruptive tech inside of those pillars. So we got that. How early do you like to get into companies, right? Do you get into George Com the day he starts up in his garage? Do you wait till you start commercial? So what phase do you get into? How big of investment do you typically like to take? What's your wheelhouse? And how long will you stay with that investment? I think that'd be great for everyone at home to understand.
Yeah. So a couple things. So people always ask, like, how do you find, you know, needles in a haystack? And so our response to that is we've built a magnet. And I think that,
Love that.
magnet is, you know, this venture build model is kind of our secret sauce. You know, I mentioned earlier, great is coming from everywhere. Tech is borderless. So, you know, over the past 20 years, we've established relationships with about 80 incubators or accelerators around the world. So these are incubators and accelerators in Singapore, India, Sao Paulo, Brazil, Tallinn, Estonia. And what that does is that allows us to get access to early seed stage companies or really bright founders building things in the areas and sectors that we are focused on. Generally, what we like to do, though, our process starts by identifying a pain point that we already want to tackle, or finding a large client or customer for that. Once we do that, we then go out and look for a company or an entrepreneur that's working on something that's dealing with that or working on that pain point. So we're really scouring the world. Once we find that they're generally early seed stage companies, so we're usually the first or second check in. The valuations at that time are usually under, let's say, $4 million. So we take a material stake because we almost want to act like a co-founder. We're not passive investors. We then work with that company for 12 to 36 months. And during that time, we're bringing in like really bright minds. So you and I just talked about AI. AI is the backbone of everything. So a couple of years ago, we realized that AI was going to be important. And while companies like Google and Amazon and, you know, and Facebook and Microsoft were going and poaching some of the top AI talent around the world, we partnered up with the University of Waterloo's Institute for Machine Learning and AI. So again, one of the top, academic institutions for engineers, programmers, and bright minds on the AI space, to ensure that we could get access to not only for VST but for our portfolio companies, the top talent. So we're able to actually, over that 12 to 36 months, bring in really bright minds or even large corporations or clients to validate that company's tech or IP. Then after that 36-month time frame, we usually spin that asset out and help them list on their own. as a publicly traded company. And again, they're able to then raise additional capital globally from Europe, the US, and Canada, and use their stock as a currency to continue to roll up. Your viewers are probably familiar with what you just mentioned, FansUnite. So again, FansUnite started in that type of mindset. We had a large clients in the gaming space. They were looking for disruptive entrepreneurs in tech in that space. We found the FansUnite team in Boulder, Colorado. They were already thought leaders, already being already very disruptive in esports and gaming. We were able to acquire that business and work with that team and provide and complement that team with funding and relationships that allow them to continue to rocket like they are now. I mean, they are publicly traded in the US, Europe, and Canada, a market cap of probably 150, 160 million. Actually, I think it's jumped from
I think
that
it's at
number.
185 million or something like that. Just way up there.
Yeah, rockstar board, rockstar team, unique IP and product, and a market leader in their space. And those are kind of traditional, consistent themes in all of our portfolio companies. They're all leaders in their spaces. They all have strong teams. They all have a customer market fit, so a very innovative product, and they execute. So that process, that venture build model, is our secret sauce, and that's what's allowed us to build this magnet, to identify these needles in a haystack.
And I'll tell you what I learned, what even I learned today. So forget about everyone watching and listening at home. The fact that you've got both sides covered. So you're not just finding great companies at early stages, making investments and helping them, but before you get to George Calm, you've already identified a potential customer or partners, so that if you make the investment in George Calm, so you're almost hedging success right from the get-go. You're not like most venture capital style investors, funds that assess risk, take their best shot, and hope they have some winners. You're actually making sure that your investment in ABC Widgets actually has a customer or partner already waiting on the other side. I think that's genius, man.
No, thank you. And again, I think it starts with two things. One, we are looking, to knock it out of the park, but risk mitigation, is a key model. So ensuring that, again, like Buffett always says, it's not just investing in a good investment, it's your entry point. So we want to make sure first the entry point is key, but more importantly, we have a customer. Either what we're investing in is going to solve a pain point in our existing business, so it makes sense for us, or two, like you just alluded to, we already have a large customer or large client in a space to validate that, which again eliminates the risk, or really mitigates the risk exposure for us, while also having an opportunity to knock it out of the park.
So there's value for everyone watching at home. If you stop the interview there, right, there's value proposition 2 and 3 for you, right? They've already got somebody waiting on the other side, potentially a partner or customer. That's a big help. The third value proposition is these are investments you and I, 99% of people, wouldn't be able to get involved with anyway. So if they found XYZ Technologies out of Estonia, you as an investor just would never have had a chance to invest that company at a $2, $3, $4, $5 million valuation. Victory Square gets there, it takes a really meaningful position and takes it essentially on your behalf as a shareholder, right? So there's value proposition number 2 and 3. So, already it's pretty powerful what you guys have put together, Shafin. That's great. Let's talk about now how you generate your income, because I read off those numbers about your Q3 record net income. For the first 9 months, you did $13.6 million in income, 18 cents per share. Fantastic performance. I mean, I can't wait to see what the annual number comes in at when Q4 comes in. How do you generate that income? Is that strictly based on portfolio valuation? So as your net asset value climbs, that's considered income, or is that from exits where, all right, we sold off XYZ Technologies and we made $6 million profit, that's income? How do you guys actually report income for everybody at home?
Yeah, so a couple of things. So one, VST from an investment perspective started off by myself and my business partner put in, I think the first 10 to 12 million, dollars into seeding the portfolio. And our objective was to prove that we could, that our return on capital was significant. And so we look at a couple of different metrics. One, our cost to invest in a business, towards what the value of that business is. Any sort of growth that gets accounted for traditionally will be used as net income on our balance sheet. Now there are a couple of things to that. One is, given that we fall under this IFRS accounting rule, companies that are wholly owned, they don't show up at all on our balance sheet. And so when we realize or unlock value is when that company is either spun out on its own and our ownership goes below 50%, or a non-controlling interest. So, in VST, there's about 23 companies, and the majority of them don't really reflect in the value of on our balance sheet.
Okay. So they're there, but you can't put them on your balance sheet because they're pretty much a wholly owned company, or you own a majority stake in them.
Yeah, so to give you an example, so last year so we work in these 12 to 36 month time frames. So the company started in 2017, and we're about 3.5 years in now. So now's the time where the companies start to be unlocked from our portfolio, and then they start to hit our balance sheet. So that started in Q3 with one of our portfolio companies, was audited, and given the the data and figures that the auditors were looking at, they put a valuation on that company as our ownership dropped to around 20%, and in that net income appeared in Q3, and you'll continue to see that as the portfolio companies, which there's probably 3 or 4 that are all being spun out, FansUnite being one of them, but there's 3 others that are going to show up on our year end for 2020 and our Q1 and Q2 this year. So we are very confident that's going to continue to grow. Now,
so you're harvesting right now. You're in harvest season. If you're a farmer, you're harvesting now.
We've been harvesting. Now the crops are coming. The crops are out, and they're going to continue to be coming out over the next couple of quarters. But with that net income, where we are able to unlock value for VST shareholders is in a couple of cases. One is we have the ability to liquidate some of the position in those companies as the valuations. So I mean, our average return on capital right now over 3 years is probably like 7 to 8x on our investments.
Oh my God! Make sure you call me on your next one so I can follow you guys in.
Yeah,
no, but that's fantastic. That's fantastic.
Yeah, and unlocking some of that liquidity allows us to continue to reinvest in and keep compounding that growth. And just there's about 23 companies in the portfolio right now, 4 or 5 which are all kind of hitting that hockey stick curve growth, where we'll see them spun out and show up on our books, and the gains will show up on our books. So,
do you ever? So let's say you got 4 or 5 companies coming out. And by the way, I'm just using this as an example for everybody at home. Actually, I'm going to use a low number so no one says 10 million. Let's say each company makes $1 million profit for you, and obviously you're looking to make much more. But I want to use a low number so no one thinks that we're giving a bigger number and goes and makes calculations. We'll let you guys determine that when you guys announce your dispositions. Do you constantly take that money and then rotate it back in to new portfolio investments? Or will there be a time, for example, if you invested in the Google of our time, sooner or later, I'm going to bet you guys are going to have $1 billion win on your balance sheet, right? Sooner or later, right? Does there come a point where you say, hey, we can take this whole $1 billion and reinvest it, or we can dividend out half of it, or a quarter or 3/4 of it? Do you think shareholders ever get to that point where maybe they'll see something coming back to them, or just keep building the net asset value of the company, of the group, of the portfolio?
No, they'll see something come back. So just on the note, so the portfolio we have right now and the companies that are prepared to spin out have exceeded what our initial expectations were on them within the time frame that we've kind of set. Congrats. So I think two things will happen. One is any liquidity, any cash liquidity that we would let's say take off the table, we would reinvest because, those 5 that are going out, there are 5 teed up in, they're doing some pretty disruptive things in, the digital health space, the circular economy, and in the energy storage space. So so we know that we can replicate that 8x immediately on every dollar we put in. Having said that, one of the things that we want to do, because I'm the largest shareholder and I have not sold a single share of VST and don't intend to, we want to issue a share dividend. So as these companies get spun out, we want to be able to, again, dividend off some of VST's ownership.
Great.
VST shareholders. So this year we will do a share dividend, for our shareholders, so that they can participate in the growth of that company, and they can choose whether to hold, or sell their ownership and get rewarded in that. And I think it's good for our portfolio companies as well, because they now have a shareholder base that came into VST that's now following them, and becoming an advocate or sharing kind of their journey with them. So from a dividend perspective, we look at 2 things. One, from we continue to see really big investment opportunities currently that we want to take and reinvest in. At the same time, we want to do a share dividend to reward shareholders, including myself, who I have no intention to sell my VST shares, but I would love to have a dividend, proportionate to my VST ownership in some of those portfolio companies.
No, I think that's genius. I think that's great, because too many companies, we've seen in the mining world is infamous for this, right? They make a great hit, and instead of sharing some of that with the investors in some way, shape, or form, they say, "Oh, we're going to take all this money and see if we can find even bigger mine." Well, sooner or later, the law of averages, you typically says that you're going to dump a bunch of money into a hole and then nothing's going to come out, right? And then the shareholders didn't really get anything along the way unless they were selling the core stock. You don't want people selling Victory Square core stock. You want them to hold Victory Square, but they get a few shares of ABC Widgets, XYZ AI, DEF, DNA sequencing. And I think that's fantastic. I'm happy to hear that. And that's value proposition number 4. So the story just keeps getting better and better as we talk about it.
George, on that note too, I mean, one of the things is, there's 23 chances for investors to hit it out of the park. I mean, that's the one thing we want to give people, that again, risk mitigation. They're getting access to a lot of really big themes, but with companies that are best in breed in those different kind of categories. But for me as an investor, like VST was kind of designed for some of the pain points I was having as an investor. So number 1, I wanted to be invested in a public company. I didn't want to be stuck in a private company that wasn't audited, wasn't transparent, and wasn't liquid. So for VST, not only do retail investors all over the world have access to it, but we're audited, we're transparent, and we're liquid. So it's important for us that we have to, on a quarterly basis, deliver results or look at things like share dividends for shareholders. Otherwise, they'll go elsewhere, right? So this was designed specifically for pain points that I had as an investor. I wanted early access. I wanted risk mitigation. I wanted a management team that was aligned and had money, skin in the game. Like if I was going to invest in it, but I wanted it to be audited and liquid. Like I didn't want to be stuck in something where I had no control. And again, that's why VST was set up for all those purposes.
That's great. Shafin, I got to admit, I love your investment thesis when it comes to how you invest in your portfolio companies. I think that's great. And I love your philosophy on how you treat shareholders also. I think that's really, really special. That's really great that you think about them that way, that you want them to participate and be a part of that success. I think that's fantastic. One more question for you on the portfolio side. So you've got 23 investments. Most of those you can't put on your balance sheet because you own a majority control. For people at home that don't understand why, I guess that's because, Shafin, to avoid a conflict of interest, if I own a majority of ABC Widgets, and I can say the valuation is this high and I can inflate my balance sheet. So when you're a minority, you're not as conflicted, and therefore the valuation is probably a non-conflicted valuation. So even though you can't put these on your balance sheet, do you still show who your 23 portfolio companies are? So do you show that we're invested in company A, B, C, all the way down? You may not see them on the balance sheet, George, but here's all 23 of our companies and what they do.
No, absolutely. I mean, there's two companies that are, let's just say wholly owned subs that we're super excited about because they show up as zero on our balance sheet. But both are companies that are, that are going to be spun out and public on their own. That we know that they're going to unlock tremendous value for us, just because the true value will show up on our balance sheet, and ultimately that will benefit VST shareholders. So the list of companies are there. It's just the way that IFRS accounting works. So for wholly owned subs, they don't really show up as anything, but that's where there's tremendous value.
Yeah, and considering the fact you've got about $55-60 million valuation, that's not going to be a difficult number for you guys to match in terms of a real big win on just one portfolio company with the valuations we're seeing, now for small cap companies. So I think there's a tremendous opportunity. By the way, I want to make a correction. FansUnite is $100 million market cap. It's the $1.60. I said $106 million market cap. It's $1.60, but it's around $100 million market cap or so, which is still a huge win, a huge win for you guys. So going forward, what is the game plan for VST? It sounds like you're a young guy. You are forward thinking. You are investing in the great Wayne Gretzky philosophy is be where the puck is going to be, not where it is. So is it fair to say, Shafin, that you plan to have to be in Victory Square and have Victory Square going for a decade, even more, and just keep growing and growing and growing this thing to benefit fully from the 5 pillars that you talked about earlier?
Absolutely. I mean, we have no intention of stopping. I think the innovation we're going to see over the next decade or two is going to be significant. We've already planted our seed in the areas. I mentioned there's going to be 5 areas that are going to be $1 trillion opportunities, and we want to have ourselves ingrained in all of those and unlock and realize that value. Again, just going back to the fact to say, hey, I wish I was an early investor in Amazon, which I was, or Google or Facebook or those things early. Now we've seen that playbook. We want to repeat that playbook. Like, history will repeat itself in that. There's going to be massive wins, and we want to be at the forefront of it. And VST shareholders that jump on board get to be part of that as well. So no intention of stopping.
Give us a couple examples of companies that will be coming out soon onto the public markets, as long as obviously the world knows about them. But give us a couple examples of companies.
Yeah, I mean, so we're I'll look at the next 6 to 12 months for us, which we're super excited about. So there are 2 companies in particular that are being spun out, I would say, in the next 60 to 90 days. The first is a company called Game On. So they're in the gaming and esports space. 2 sectors that we've seen grow significantly.
Love those.
And are going to continue to grow. So that company is exciting for a couple of reasons. One, not only the sector that they're in, but their management team and board. So the CEO, again, very great founder, Matt Bailey, used to work for the Brooklyn Nets. Strong pedigree in the gaming and sports sponsorship space. He's assembled a board of rock stars. So the chairman of his board is a gentleman by the name of Jay Moses, who's on the board of Take-Two Interactive, which is a $25 billion publicly traded company in the U.S. So again, strong team, strong management, strong board oversight in that. And then they've got a product that is very forward-looking and innovative, and it again is turning the first screen TV experience to become more social. We've seen cord cutting, we've seen people going towards Twitch and TikTok and these other types of digital mediums for content. But traditional TV, they built a tool that can be ported onto other things, but that really creates a more community around traditional TV content. So they built a great product for a space that needs it. Great team, but more importantly, they've got distribution. So in everything we look at, I think you talked about earlier, we want to make sure there's a customer. We don't want to invest in something unless we know that we can port it into a distribution pipeline or a customer. They've got a large, telecommunications giant that has given them access to set-top boxes in homes and bars across the U.S. So we know sector, team, product, and distribution all there. They're teed up to go public, I would say, in the next 4 to 5 weeks. And we think that it's going to unlock tremendous value. on the heels of how successful FansUnite's been. The other is another company called Immersive Technologies, again, focused in the virtual and augmented reality space. Large, great team, large customers that they've already built product for, like Allegiant Airlines, the FDA, Kalahari Resorts, ESPN, Bayer, eBay. I mean, the list goes on. Great product, great team, great sector, and great space. And there's a company that's publicly traded right now that is, I'd say is very comparative to where Immersive is. And the company is, I think, called Next Tech AR or something like that. And they traded about a $500 million market cap. So Immersive's got sector, team, product, clients, revenues. They're going to be listed after Game On, which we think will happen in probably April, maybe May. So again, those are two being spun off. The third, which is not a spin-off, which I'll want to talk about, which is our focus kind of on the digital health space. So, to me, that space and sector, quality of life is going to be massive. And I think we talked about it earlier. I'm a big believer in prevention around healthcare. And so we have a number of plays in that space. We've got a diagnostics testing company out of Brazil that, has established a strong base of distribution partners and hospitals, pharmacies all throughout Brazil and Latin America. Large customer base of people that have bought their diagnostic tests. And in the US, we've made a number of acquisitions in telehealth companies that can provide telehealth services or direct-to-home healthcare visits. So
that's going to be a massive, massive vertical going forward.
Massive vertical. And again, I think the big thing is we have the technology. We plug into over a network of 10,000 healthcare professionals in the U.S. And then that number is even more significant in South America to provide those services. And then we're tying all of those into things like sensors, software that can track your blood sugar levels and use AI and logic to determine adjustments and changes you should make in your diet or your exercise routine. So the health space is one that we as a company are going to keep wholly owned internally because we see massive growth and multiple 30 times forward-looking revenues in that space. And so we've got revenues, great IP, great team, and to me, quality of life. There's no price that people won't pay to ensure that. So
and you know what? I mean, if I look forward to what you can do with that, the telemedicine and being connected to the end user, patient, whatever you want to call it, is step one. But every year you can add on different modalities, right? One for insulin, one for ECG, one for, just about anything. So going forward, you could just keep adding services one on top of the other. So you never end up, all you do is just keep generating revenue from millions and millions of people on different modalities. I don't know if that's where you guys think of going, but that seems to make a ton of sense.
You're spot on. I mean, it goes back to, building an audience first. Like tech can become commoditized. For us, building an audience first was very key. And so in the health space, I think with our company in Brazil, they had a rapid test, but they had one rapid test for COVID. But it was almost like a Trojan horse because what it did is it allowed us to build a massive audience. So, when you have something that everyone wants, it lowers your customer acquisition cost. And so that built up an audience of people that we know could use telehealth. Now, once you get them on there, like you said, every year or every quarter, you're adding on a new treatment because once someone is onboarded and they're using your software or they're using your device,
they'll look at everything new.
Look at everything. So whether you may have diabetes, you may have arthritis pain, you may have diet, you may have gastrointestinal issues. So many things that if we're tracking your waste on a daily basis, we're able to take that data and personalize it to you, right? To provide.
And you're just growing with the customer too. You get George a customer at the age of 50. You know that generally people in the 50 and 60 have these issues, but once it gets to 60 or then there's more offering and 70. So you can just keep growing with that customer forever. And they'll be happy to do it because you're just making their life better and healthier along the whole way. So you've got them as a customer for every new product you can be rolling out that's applicable. And man, that's a genius long-term vision. That's fantastic.
Well, yeah, and just, I mean, look at the last year for COVID though. Like quality of life and health, was super key. That's, kind of what everything we did around the pandemic was around protecting our quality of life and our health. And two, technology. The acceleration and the importance and need for us continue to grow. Those two things are going to be constant for the next 10, 20 years onwards. And so for us to really, really have our seed planted in both, builds and puts us at the forefront of the massive gains that are going to happen in these sectors over the next, 10, 20 years.
Shafin, man, one thing that's so great about it, and we'll stop there because we could literally talk for 3 hours. Sometimes tell companies we could talk for another hour. We talk for 3 hours because there's just so many elements to to Victory Square. Victory Square is a sum of all of its portfolio companies, right? And I mean, it's scary how integrated they could be. How many more you're going to add on? How many more are going to be, monetized and with exit strategies per year? It's a fantastic company. I'm glad that we're able to take the Victory Square story to the world because it provides investors, everyday investors who aren't, and this by the way, this is 98% of who aren't aware of the implications of artificial intelligence, DNA sequencing, blockchain, and so on and so forth. It gives them a chance to sit back and say, look, I don't have time to become an expert in all this, let alone try and find companies that I can invest in that would fit my criteria. I'm just going to invest in Victory Square. So, I love what you guys have done. Can't wait to have you back because I get a feeling we're going to have you back a lot, not just for Victory Square, but every time a company goes out, every time a company exits, every time a new company actually makes their way onto the balance sheet because you're reducing your ownership. I'm excited and thrilled about your business model, especially because it shares the same philosophy as Agoracom. So I'm not just saying that as an empty platitude, but our thesis is we're going to create more small cap wealth this decade than the last 3 decades combined, maybe even more. And the fact that you guys are actually at the forefront of that is exciting. I can't wait to have you back.
Thanks so much, George. We're excited to be here.
For all of you at home, you've been watching or you've been listening by podcast on Spotify, Google, Apple, or your favorite podcast platform. To Shafin Diamond, he's CEO and founder of Victory Square. And when we say founder, you heard him earlier, put his money where his mouth is. Him and his partner put up $10, $12 million just to make sure that they were the first money in to prove the concept. Victory Square trades on the CSE under the stock symbol VST, in the US under VSQTF, and for our friends in Europe, 6F6 on Frankfurt. It's up to you now to do your due diligence. You can hear my excitement, but at the end of the day, that's not you. You've got to find out if this company fits, do more due diligence 2 ways. Get to Agoracom. We know there's a lot to digest here. On the hub, we've broken it down into a real understandable way for you to really understand how big, but at the same time, how specialized Victory Square is. And then from there, link over to the website. I think it's powerful to go through the website, especially the portfolio section, to see the kind of companies that they're invested in. Hopefully that excites you. Hopefully those are the kind of companies you want to be part of in the future. And you've discovered your next great small cap company. Have a great day. Thanks for joining us. See you next time.